Hi everyone, this is Bill, and welcome to our emerging channel, where we hope to offer our viewers insight gained from our experience in investing, both in real estate and in the stock market. And sometimes, we like to have fun by covering the college football gridiron. Today we want to talk about stock investing by looking into what is known as dividend reinvestment plans, or DRIPs. Back in the day, when buying just one share from within a brokerage account, even if you had one, investing in stocks came with expensive commissions. For most small players, and particularly new investors, buying stocks was seemingly cost prohibitive. But a great way to get around this back in the day was through DRIP plans, which I continue to find a strong and fun investment vehicle, particularly for beginners. These days, new players like Webull and Robinhood, who are companies that are democratizing finance, have forced older brokerage players like TD Ameritrade, Merrill Edge, and E-Trade to become more user-friendly by offering commission-free trades and full-scale DRIP programs. There are a handful of companies that have been long-term players providing the public access to DRIPs, including FirstShare and ComputerShare, who we have been dealing with for decades. ComputerShare offers access to hundreds of outstanding companies which participate in DRIPs. Through ComputerShare, who is not a sponsor of this video, you can examine plan criteria and facilitate the enrollment in any plan you choose. ComputerShare also keeps a user-friendly ledger and charts your portfolio performance. Today, even with commission-free trades, DRIP plans are still very popular. Enrolling in DRIP plans allows you to buy direct from great companies across America through a vendor for a very, very minimal fee. Typically, each company will require a certain level of initial investment, usually within a range of about $50 to $250, to get started. Should you wish to make scheduled purchases, most firms appropriately require you to set up your bank account to have a monthly withdrawal of, say, $50. The program purchases shares on a specific day of the month, and they reinvest any dividends that you receive. You can also buy more or adjust your investment allocation at any time. Over time, with your initial investment, subsequent purchases, and the continued reinvestment of your dividends, the value of your investment builds up quite nicely. The great thing about the DRIP option is that once you sign up, you can kind of set it and forget it because it becomes fully automated and just does its thing. TD Ameritrade, whose brokerage I am a client of, has a short, insightful video on this topic.
Imagine that there are two investors who own 100 shares of a company that is currently trading at $100 per share. This company pays out an annual 4% dividend. The first investor has enrolled in a DRIP, whereas the second investor keeps the cash from the dividends without reinvesting it. The DRIP allows the first investor to automatically buy an additional share of that stock during the first quarter. If the company continues to have a 4% dividend yield, after a year, this investor would own more than 104 shares, worth $10,400. During the next year, this investor is receiving dividends on 104 shares instead of just 100. So this year, she receives more than an additional share. From one year to another, these differences may seem small, but over a long period of time, they can really add up. Let's assume the stock's price is the same over the course of 20 years and has a steady dividend yield of 4%. For the investor who simply kept the cash from dividends, his initial $10,000 would now be worth $18,000. But for the investor who reinvested dividends, her initial investment would be worth more than $22,000. That's a 50% higher return than the investor who kept the cash dividends.
The main highlight of the DRIP program is you dollar cost average into a stock position. For example, if you invested all your money in Walt Disney World in January, you got crushed because of the virus. But if you were buying every month and reinvesting your dividends, you bought Walt Disney on sale for several months and have now come out in great shape as Disney has been back to approaching their previous 52-week high. Shortly after graduating college, I started DRIP programs with 4 stocks: Home Depot, McDonald's, Disney, and Coca-Cola. If you were to spend a couple $100s on items at Home Depot and followed up with a burger and a Coke at McDonald's, it sure felt better knowing you're a partial owner of these companies. Over the years, my wife and I have sold off Home Depot and McDonald's regrettably, but we still hold and contribute to Disney and Coca-Cola. Positions in these companies have grown substantially over the years while compounding returns. Something I share with Warren Buffett and his company Berkshire Hathaway is that Coca-Cola is our largest stock holding. Coca-Cola is a historical company, and the stock over time has been a very strong performer. A chart provided via Motely shows the price appreciation over time of the Coca-Cola company. For those just starting out in investing, Coca-Cola is really a good stock to launch your investing fortunes. It is a great company and over time has paid an increasingly steady dividend. Although it used to be considered more of a growth stock than it is today, it still has plenty of staying power in our view. A bomb could go off and every day I would still be getting a big gulp of Diet Coke. We love Coca-Cola and many of the companies that have long covered the drip landscape, but the list of companies now participating includes many of the disruptive companies famed investor Cathie Wood appreciates, including Tesla. Dividend reinvestment programs are an outstanding vehicle to create wealth over the long term, and I am forever thankful I have been traveling down this road. This is a great and fun way to invest, an impressive option for those who are beginning their investing journey. We hope you enjoyed our taking stock of dividend reinvestment programs. Please let us know in the comments if you have or if you do participate in drip plans. Your experiences could be of value to our viewers. As we conclude, please feel welcome to follow us on Facebook at Future Breakout and help us by liking our video and subscribing to our page. We sure would appreciate it. Thank you so very much for watching, and we'll see you next time.